If you change your mind, you change your life, just change your mind. The Lord loves you. He's standing with his arms wide open for you. Oh, be encouraged, cause this day's for you. Don't you let this opportunity pass by you. Yeah. Oh, change your mind.
Hello, welcome back. My name is Kenneth Page and I'm here with Adulting 101 Org. Here at Adulting 101, our mission is to influence a generation of young people to help build a strong foundation for their lives and position themselves to discover what they can contribute to this world. Through transparent, vulnerable, and honest conversation, we will teach meaningful, impactful, and applicable life skills that young people need to successfully navigate life. Today, we're finishing up the third part of this three-part series on understanding credit. Today's series is called Credit in Life, where we finish breaking down the way credit relates to your life, as far as it relates to relationships, building wealth, and then we also dig into how to check your credit report and what to look for. Now, if you haven't seen part 1 and part 2, you really need to stop this and go check this out. In part 1 and part 2, we start breaking down what credit is. We talk about a FICO credit score, and then we begin to explain what's good credit and what's bad credit and what that allows us to do. We have the amazing financial and credit specialist, Serena Dene, with us today. And then we also have students Kalindra and George. So please come right on in and let's get started on this conversation. And if you don't have any paper or pen with you, go ahead and grab that and get ready to take some notes, because we are truly dropping gems for you that you're going to be able to use to help navigate your life. All right, let's go.
And also with that, George, imagine this. You're 17, 18?
18, sir.
18. You're 18 now. Imagine you work hard these next couple of years, get your income right, good spending habits, you take care of your credit, you meet this woman, you get married, and y'all go buy a house. Now, the majority of the time, and it makes sense for a marriage to put both spouses on that mortgage. Imagine if you go apply for a mortgage to get a house and your wife applies on it too, and you don't get the mortgage because her credit isn't good enough. Or Kalindra, you're trying to buy a house and you taking care of your credit, and you can't buy this house with your husband because his credit is too low. You're sitting here with a 7-something. He's in that very bad 400, 517 range, and now he can't even be on the mortgage application either. Which, let me tell you why that's important too. Because when you're going to get certain types of loans, your credit score is one thing, but income is another. Like, they manage the income. So let's say you're going to buy a house and it's like, by myself, I can't afford it, but I know if we're together, we'll be able to afford this thing. Well, if their credit is so bad that it can't be on the mortgage application, the bank or the lending institution isn't going to consider their income as well. So now something that maybe y'all could definitely afford together, you're not going to be able to get it. Y'all aren't going to be able to get it because both of y'all can't be on the application because one person is too low. Or both of you get on the application and your credit is good enough for a 2.15% interest rate on your home, but theirs, they credit low, so their interest rate ends up being like 4 and some change. And now y'all got to meet in the middle. They're going to balance it out. Now you can have a 3.785, which is still a good rate, but you're still going to pay thousands of dollars more if you would have had that lower interest rate. And I think like a lot of times, like we don't understand how important credit is for ourselves, but not even realizing the type of roadblocks or issues that our partners and spouses having bad credit to put into our lives. Now, I gotta be honest, like, so Kalendra, you go on a date, somebody hits you up, oh, you looking good, girl, let me take you out. Now you go on a date. And I hope they don't come to that.
Because they're cut.
All right. So, well, either way, they should have in a text with an emoji, right? So you go on a date, right? If a guy asks you, how's your credit, is that something that you want to talk about on the first date?
Okay, not the first thing. That's a little, like dates on down the line. But it's understandable. Like, I wouldn't not talk to them again.
Yeah, that's real. So I hope y'all carry that going forward. Like, understand, like, credit is not only important for you, but it's also important for like your partner's credit. It's going to affect your life as well. All right. Y'all any questions so far?
Yeah, would you ask that on the first date?
Now, years ago, I would have asked that question. I know that it's, that's intimate. That brings out a lot of stuff. But from going, if you ever go through a situation where your partner isn't, financially stable or doesn't have good credit, and then that falls into your life and you realize, wait, I'm suffering because you don't know how to manage your stuff. It ain't happening again. I have no problem. Listen, if we could look, I got questions. Marriage is a whole nother conversation, but I got questions. We gonna be together for a long time. I got questions. And we pull your credit in front of me. We going to Credit Karma right now because you get a free credit report each year. You get a free credit report. Experian, TransUnion, or Equifax. Free credit report, Credit Karma. Listen, what's your social? What's your birthday? We gonna look this thing together. I guarantee you. Look, I'll put it back. I guarantee you, if we pull that thing up, and I see all of this very bad poor range, it ain't an automatic cutoff. But I need an explanation. I need an explanation. How did it get there? Because at the same time, you can have bad credit. Mostly it happens from just poor decision making. But sometimes, it's a life circumstance. Earlier, Serena, you mentioned medical collection account. I mean, we don't plan to get sick. Now, there's other things we can have in place, like, having a good health insurance, short-term, long-term disability, some other responsible measures we can take beforehand, but nobody plans to get sick. You'll see time and time again, somebody gets cancer. And to cover the treatments and things like that, they end up taking out second mortgages on the home. They get these bills, they max out their health insurance. Now they got to come out of pocket. So, you see those on it, and that's going to hurt your credit too. That tells a different story than I got 7 credit cards and collections because I just didn't want to pay them no more.
Because they will get you. If you go into Belk and they say, oh, if you apply for this credit card, you'll get 20% off on these shoes. That's how they get you. So, yes, we're laughing, but that's a serious matter because you can get sucked in, and it's really where your mindset is. Again, the discipline. Do you have an ultimate goal? Because that's what's going to keep you in alignment. But aside from that, you do have to ask questions because a lot of times your credit and how your understanding of money comes down to who raised you. it's an uncomfortable conversation, but you have to think about it. Sometimes your parents can't teach you what they don't know. So if you initiate that discussion and see, okay, where is that person's mindset? What were they taught? What did they see? You know, our grandparents and great grandparents, a lot of them didn't use credit. They paid cash for everything. So they don't know, you know, so you do have to ask and have those uncomfortable discussions. And now being older, I'm knocking on 30. I'm in my late 20s. I'm the same way. They listen, brother. Oh, all right, you cute, but what you got going on? Like, do you have a job? You know, do you have a good handle on your money? Are you saving? Do you have a savings account? How much is in that savings account? Like, it's, you don't want to be too pushy. I wouldn't have it on the first date. However, that is definitely a conversation you want to have before you get engaged to somebody. Please do.
Mm-hmm. And speaking on this with relationships and bad credit, you know the next thing that turns into? The big no-no that you should never, ever do. Y'all ever heard of co-signing? George, you know what co-signing is?
I've heard of it, but I don't know what it is.
Serena, tell us about this co-signing thing.
Ooh, okay. So a cosign is when, okay, I'm gonna give you a scenario. You go to the car dealership and they say, okay, your credit is a 602. But so that means that you have to either give us 3,000 down, your interest rate is going to be 19%, or you can go and ask your mom that has a 721 and she has good credit, have her co-sign for you so then they can leverage the two credits that you just heard Kenneth mention. They leverage the two credits that will lower your interest and give you, you know, better options. So that person is risking their credit to help you get something that really you can't afford. That's what co-signing is.
That don't sound safe.
At all.
Yeah.
Not at all. I highly like that is something that I hear so much, and you're helping that person, but you're really not, because if that person needs a co-signer, that means that they really can't afford it. They're not ready for what it is that they're trying to buy. So not only do they have the potential to ruin their own credit, but then they did have access to ruin yours. Now, as a co-signer, the way that things are set up, if you co-signed on something, if that person is late on it, or they, let's say they're 90 days late, they're not even going to mention it to the co-signer until they've been 90 days late. Like when they hit that first late payment, you're not going to know until you see it hit your credit. They're not going to call you until it's been super late. So then they're calling the co-signer to say, hey, we've been trying to reach the primary. We've been calling this person. They're not answering. And now they're $1,200, you know, behind on this loan. Can you give it to us? And then that's it. Like at that point, you're already at risk. So being a co-signer is not wise at all. Do not co-sign for anything that you do not have the ability to pay on that person's behalf. If you cannot afford to pay it, if they cannot, to save your credit, don't do it. Because if that car gets repossessed, it's hitting your credit too.
So I could be on co-sign all along and take care of my credit perfectly, but because this joker don't take care of what I co-sign for, one, I'm not gonna find out till it's really, really bad. And two, as soon as they get that first 30-day late payment, that's like 50 and 100 points off my score.
Potentially,
Yeah,
yes.
yeah, that's how I co-sign. I'm telling you, don't do it. Um, you get the dating someone, you know, they get the skinning and grinning and like, man, you just, you know, help me get this motorcycle, you know, my credit too bad, help me out. Don't do it. Don't do it. Because if they credit bad, it's because it's bad. They didn't take care of it like you took care of yours. And obviously, they're more willing to mess yours up than go through what it takes to repair their own.
Right. I had a consultation with the lady. She's 31, so she's not that old. She's 31. She has a boyfriend. They have two kids together, and he mentioned the motorcycle. That's where he got that from. I told him about this conversation. She bought him a motorcycle. She didn't even co-sign on it. She put it in her name for him, but he was supposed to pay it. Of course, he did not pay it. If he was good at paying stuff, he would have been able to get it himself, right? Just think. So of course, now her credit is jacked. She has all these late payments because she did something for her boyfriend. Don't do it. Even if that's your husband, don't do it. Because if his credit is bad and your credit is bad, then what do you do? Like, I have clients that they're currently working on their credit now. They are in their 50s, in their late 50s. They have never owned a home. They have been renting this entire time. As single people and as a married couple, they have never owned a home because of their credit. Not because they don't have the money, but because of their credit. Which, Kendra brought up a great point. You have to have a good handle on your money. And Kalindra, I'm glad that you're asking, how do I make sure that I budget now? How do I make sure that my money is together now? Because they do go hand in hand. You can't have one without the other. You can be an engineer making six figures, but if you don't have a good handle on that, you can still have bad credit simply because you're not paying stuff on time, or you don't have a good system, or you're just applying for stuff that you really don't need. So you do have to make sure that you're keeping a budget. Write stuff down. I'm a big person on writing things down. What does your budget look like? And be realistic in your budget. And if you have extra money, save it or put it somewhere, or put it into a bill. Try to pay stuff off quicker. With your car payment, if your car payment is $200 and you just happen to have $50 extra at the end of the month, put that $50 on your car loan, because that is going to the principal and not the interest. So you can get rid of that car payment a lot faster. So use your money, leverage. That's the word we like to use. Leverage your money to help you with your credit. So then you can leverage your credit and spend less cash. But we'll get into that.
Really, really great information thus far. There's one more graphic that I want to look at. Looking on this website, I was trying to find some credit score statistics, right? And this one is two statistics, and it breaks down credit score according to age, and it also breaks down credit score according to the income bracket that you're in. And one of the things that we see is, on average, and one, it says, this information is from 3 years ago, but it does follow the trend. But on average, the younger you are, the lower your credit score is. And consequently, also, the more money you make, the higher your credit score is. So we see a correlation between age and credit score, and we see a correlation between income and credit score. All right, so Kalindra, I'm gonna start you. I want to ask you this question about the age and the credit score. Which one do you think affects the other? Do you think it's age that affects the credit score, or do you think it's the credit score that affects the age? That makes sense to ask. Or which one affects the other?
Because we know now, or at least I know now, that the length of your credit history affects whether you have better credit than like you had before, or bad credit. I'd say I guess you could say it's the age that affects the credit because of the time. If you're not here long enough, you don't have enough time to prove yourself.
George, what do you say?
Yeah, I agree with that. I agree with Kalindra. Like Serena said, if like the longer you have something, the more you're gonna build your credit. So
Serena, what do you think? What do you think? Why do you think we see this correlation between age and credit score? Are there any other factors besides just time and length of credit?
Yeah, maturity. Hopefully, the older you get, the more knowledge you gain on it. It gives you the opportunity to learn more and apply what you're learning. a lot of us, I can speak for myself, I'm in that 20-29 range. A lot of us, we didn't learn about, money and credit in school. And again, our parents can't necessarily teach what they don't know. So hopefully what it looks like is when you're younger, there may be less information that you have. You're just young, wild, and free, maybe having a hot girl summer, and you're just on vacation all the time, and you're, spending your money. So you're not as mindful of things because you assume that you have time. But the older you get, typically when you get into your 30s, that's where you see people wanting to buy homes and things. So they're getting a lot more mindful of their credit, making different decisions. So that's what I have seen.
Mm-hmm. And no, that's absolutely true, because one of the biggest places that credit shows up is when we start making those larger purchases, those larger financial decisions. Mainly being, I think, a house for the majority of people is the largest expenditure they're going to have in their life, and you really start looking at home ownership. Once you start thinking about marriage, a committed relationship, or having kids, people tend to start getting more important, the value of having a house. And just to shift gears a little bit, a quick question for you, Serena, because I know you deal with like all things finances. When we talk about, because lately there's been a lot of talk about wealth, building wealth, you hear it a lot. How important is home ownership as it relates to building wealth?
It's extremely important because with with owning a home, that will accrue over time, meaning that you can have equity. That's the word. You have heard it before. Your house actually builds income for you. So you can pull money out of it if you need to. Whereas if you go buy a car, as soon as you drive it off the lot, the value went down immediately. So a home is extremely important because, of course, you have the equity in it. You can do renovations in it and sell it for higher than what you spent on it. The land that it may be on, that could be worth a lot, especially here in the South. You can purchase land with your home. So there's a lot of income that it can generate, and not only that, but you can pass that on to your children. You can put that in a will and leave that to your family. That can be in your house for generations. I mean, in your family for generations. Whereas a car is eventually going to die. Eventually it's going to go out. You can only do with so many repairs and it's going to go away. But in a home, it's completely different. So yeah, homes are extremely important. It's a great way for you to be able to pass on a legacy, but it also, again, it accrues income for you if you handle it properly. It can be an investment property at some point if you wanted to. You can live in it for 2 years yourself and then turn it into an Airbnb, and now it's paying for itself. There's many things that you can do with a home.
Yeah. One of it, especially when you talk about using it as an investment property and a source of income, one of the things, my mentor advised this to me early, and I was in a position to do it, and it helped me out a lot. If you can, like, you're always going to need a place to live, and it's always going to cost you money. But if you have a house and you own your own house, a duplex, a condo, something like that, if there's enough space, excuse me, you can have somebody else come live with you and charge. I have when at times I've used my home I lived in it, and I'd also have a roommate. I generally would charge the roommate my mortgage. Whatever my mortgage payment is, that's about what I charge them. And it sounds like, oh my God, like, why would you charge them that much? Well, it's still cheaper for them to pay me what I'm asking for than it is for them to go get their own studio apartment. I'm not gonna take, like, the average we up in Greenville, I think like the average, apartment, like looking at one bedroom is close to $1,000. Our mortgage ain't that much. So coming to live with me and paying what I'm asking for in rent, you're saving money, but I'm over here like, I'm living for free. You know what I'm saying? But and when you talk about building wealth, when you talk about, being able to have extra cash flow, being able to invest in anything, another big thing, I bought my house like 5 years ago. Greenville started booming. Like Greenville was growing in that time. My house appreciated. My house appreciated by 68%. That's how much my house appreciated by, which means simply because I own a home, over the past 5 years, I've made thousands of dollars. And you know what I did for it? Nothing. Like I just owned the home. I just owned the property and it appreciated. So when we talk about like access to cash, building wealth, looking at cash flow, spending habits, all of those things, it still gets tied back into your credit, back into your credit score, the way you handle money, the way you handle your finances, and that's all going to come back into the quality of life. Now,
Also, your home is a tax write-off too. Owning a home can be a tax write-off. So when you're renting, and not to say that renting is completely a waste of money. A lot of us think that, but you can actually use your rent payments as a way to build credit. So keep that in mind, my young people. If you are renting, use your rent payments as a way to build your credit. A lot of people don't know that that's an option, but you should absolutely do that. But as he mentioned, you can be paying, $900 for an 800 square foot apartment where you can go and get a 1,600-foot house and your mortgage is going to be less. But it's also a tax write-off because you own it, and it's the equity is rising, as he just mentioned. The area around you is building up, so of course there's more equity in your home. It's worth more because the area is now coming up. So it's many different ways.
mm-hmm. It just goes back to show like how tightly knit credit is wrapped up. Now the very last thing that I wanted to point out, the very last thing I wanted to talk about was Serena. I was looking at this statistic online, and I found that let me ask you this, Kalindra and George, what percentage of Americans do you think never check their credit reports?
60.
70.
Y'all are right up there in the range. Y'all right over 50% of Americans, according to FICO statistics, never check their credit report. Never check their credit reports at all. So, Danae, will you talk to us about when we go check our credit reports, the type of things that we should be looking at when we're looking at our credit reports?
Yes, so I recommend that everyone check their credit reports now you don't have to do a hard pull again. You get a free check once a year, but you can also use Credit Karma. Now, Credit Karma is not the most accurate, but it will give you an idea of what's happening. But when you're checking your credit, you want to make sure that everything that's on your credit you actually did. Identity theft is the #1 crime in the US. So you have to make sure that nobody's putting stuff in your name, that nobody's applying for things using your social. Especially with, everything is so accessible. We have Cash App, we have Amazon that stores your card. Like your card is in so many different places. You want to make sure that nobody's paying for your stuff and with your cards running up the balances, on your credit cards and things. So you want to check for that. You want to also look at how many inquiries have I gotten in the last 2 years. Am I applying for things too often or too close together? Make sure that your personal information is accurate. Sometimes, like if you are a senior, your dad is a senior and you're a junior, sometimes they will put things on your credit accidentally that's supposed to go on your father's. So you have to look for those little minute things that you would assume these credit bureaus will check, but they don't. Credit agencies, they are for-profit businesses like everyone else. There is a human being that's reporting these things. So they can have human error just like every other company. They are not government-based. So you have to check behind them to make sure that everything is accurate. One inaccurate item on there, whether they have your date of birth incorrect, whether the spelling of your name is incorrect, any of those little minor things is reason to have them clean up your credit, which again falls under the Fair Credit Reporting Act that I mentioned before. So you want to check those little things that you think is small, but can have a huge impact on your credit.
Making sure we go back and double check our credit reports for accuracy, for making sure things are on there right. And even sometimes someone could be doing something on our credit that hurts our credit score that shouldn't be there. So the sooner you're able to recognize it, the sooner you're able to, call the company, get it cut off, get things reversed so that you get a chance to get that cleared up and not negatively impact your credit. Now, I think I almost want to say we exhausted the topic of credit, but I want to be honest, there's still so much more that we can talk about with credit as it relates to your life, what it says about you. I mean, when you're dealing with credit, I mean, discipline, accountability, responsibility, maturity, leverage, planning for the future, discipline. It's so reflections of habits. There's so much wrapped around in credit, but I think we got the bulk of it and the majority out of it today. We talked about just flat out what credit is, what affects a credit score, the different things we can do that'll, positively impact our credit, the things that'll negatively impact our credit. We looked at, credit as it relates to relationships. We looked at credit as it involved in our life. We looked at credit, home ownership, and how that leads to wealth. So we really dug into it. So, before we get out of here, I just want to make sure and we also talked about building credit, tangible things that you can do to start building your credit today. So I want to make sure, we didn't leave any stone left unturned in this first one. Kalendra, do you have any final remarks or questions that you want to ask before we get out of here?
Yeah, question about disputing. So earlier, you asked, or you said that some places dispute things legally. Like, when do you know the difference? And is there a difference in response to your credit?
Yes, it is. So, for example, if you go into Credit Karma and it'll say, is this you? If you had a collection item that showed on there, there will be a button that says that you can dispute it. When you do something electronically, there's nothing legally binding to that. You're just clicking a button. There's no way to check it. There's no way to make sure that it's going to stick. If you do it, it may go through. They may actually dispute it and remove it, but it's going to come back because there was nothing in writing, nothing was signed, no attorney was behind it to make sure that it doesn't come back, specifically with collection agencies, because they're going to harass you. They're going to mail you stuff. They're going to call you all day long, every single day. But if you're dealing with an attorney, they can stop all of that. If it's a situation where you need to negotiate and have it removed for your credits. For example, I had a client, she had a Verizon bill that went into collections, but she wanted to get another phone. Of course, Verizon was like, no, we don't trust you with another phone when you didn't take care of the first one. So what we did, she came through our company where we disputed that item on her credit for her, and we negotiated on her behalf to where she just had to pay a percentage of what was owed on that first one so that she could rebuild that relationship. So you can tell whether it's legit or not by what they say the process is. If you have to pay a huge lump sum of money up front and then you never hear from that person again, of course. If there is no kind of follow-up if they're not explaining to you, okay, we're going to put together these letters, this is what the verbiage is going to say, you have to sign off so that they know that it's coming from you. Or, you know, even if you do it on your own, you can dispute stuff on your own, but you always want to do it in writing. Always do it in writing. So then that way it's never your word against theirs. There will be something to prove, yes, this is what we agreed to, and you have to hold up your end of the deal. Does that answer your question?
Yes.
Okay.
Thank you for that. What about you, George? Any final questions? Things you want to know?
No, sir, I'm good.
All right, word. Serena, final closing remarks.
I hope this was helpful for you guys. It can be a lot. Credit is a revolving door, but just, you know, hold on to those main points of just paying stuff on time, being mindful of how much you put in your name. Understand that credit ultimately is debt, but you leverage it. You're supposed to take advantage of credit in a positive way to help you be able to have more advantage when it comes to your status. So like your homes and jobs and things like that. You want to use it to your benefit, but understand that when you get something on credit, ultimately it is debt. So it's not yours until you pay it off. So then that comes into how you handle your money. So you have to make sure that you're handling both. Write stuff down. Google is your friend. If you're ever confused, Google or ask the adults around you. You know, ask questions. And that will also tell you the mindset of the people that you're around, because they may be able to give you some insight on something that you didn't think. So, you know, just ask questions. Do your research. Be mindful, even when you purchase a home, that is something to celebrate, but ultimately it's debt until you pay it off. So, you know, just be mindful of those things. Write it down. Write everything down. I'm huge on writing stuff down. So then that way, you know, you can make sure that your finances can balance out with what you're putting in your name on credit. But that's it. I enjoyed it. This is a great conversation. And you guys are
Wow.
bright. The
What a
questions and the information. I
phenomenal
love it.
series we just finished up with Serena, Kalendra, and George. Throughout this series, we really dug into credit. We talked about what credit is, broke down your FICO score, gave you tips to building your credit. We educated you on collection accounts. We talked about building wealth, home ownership, what's a good credit score, credit in your relationships, credit in age, credit in your life. So we really dug into credit in this 3-part series. The one you just finished today, we really dug into credit in life. And then we also talked about how to check your credit report, how to check your credit score, and the things to look for when you do so. Thank you again for sharing your time with us as we broke down the understanding of credit for you. All right, so there's a couple of things that I need you to do. The first thing I want you to do is have a period of reflection. Think back on the things that we went over today. Think back on the things we went over during this series, and consider how these things fit into your life. Because the next thing that I need you to do is put some application with that reflection. Reflection is going to highlight the areas in your life that this information fits, and application is the actual doing of it. Because we need to do things differently. We need to do things better to create that ultimate life that we want to live. And credit, unfortunately, is a big piece of that, for better or for worse, right? So, get some reflection, some application, and then I also need you to share this video. If you got anything out of it, if you learned something, if you found something useful in it, don't keep that information to yourself. Share it with someone you care about, share it with someone you love, share it with someone that you know could benefit from this situation, from this conversation, and I'm pretty sure it's a lot of people that could utilize this information, so make sure you share it with anyone that you know that could benefit from this. Now, in the credits of this, you're going to see the contact information for Serena Dene. If you need any help with your financial management, anything, credit repair, credit services, anything like that, please reach out to her. She would absolutely love to hear from you. And here at Adulting101.org, we would love to hear from you too. Visit us on social media, Facebook, Instagram, YouTube. The handle is Adulting101.org. And when you interact with us, use that hashtag #DoAdulting. We can't wait to hear from you. And if you support the mission of what Adulting101.org has set out to do, if you support the cause, if you support the betterment of the next generation, please donate. Please help us continue our services. Please help us continue to reach and enrich this next generation. You can give through Cash App, $DoAdulting, or you can go to the website doadulting.org, and there'll be more ways to give there. Now, thank you so much for sharing this conversation with us, sharing your time, and make sure you come back next week. We have a whole lot more, a lot of content, a lot of great things planned for you.